Hello, good morning, trade pros. Welcome to our morning market update for Wednesday, January 31st. It's the last day of the month, the last day of the first month of the 2018 calendar year. So, man, that flew by really quick. I don't know about you guys, but I don't know where that went. It's like I just closed my eyes. It was Christmas, woke up, and it's 31st of January. All right, we're going to talk about a lot of things today. We're going to do some earnings recap from yesterday. We're going to look at overview of the markets abroad and globally. We're going to also look at the Fed meeting coming up today at 2 p.m. in the afternoon. Very important for assets and markets. And we're going to review the State of the Union, and I'm going to tell you why Apple could be in big trouble. Furthermore, than before. All right, so here's the deal. AMD last night down 0.5% after hours, warning of costly security fixes. That's AMD's report. They didn't do too well, down 0.5%, but look for it this morning. It could continue to drop. Electronic Arts, EA, you guys know that. If you have children that play video games, or if you play video games yourself, EA, it's in the game. Sports games, you guys remember that? Fun times. Plus 7.3% on strong bookings outlook. So EA is a massive company, and they've done well. McDonald's is down 3% following the dollar menu fears, and that's satirizing their profits. Pfizer's down 3% amid a higher than expected tax rate. So you can see earnings mixed, but overall to the downside. Not a good look. We'll look at today. Keep tracking with healthcare companies in the healthcare sector. I think they're going to sell off. Last night in State of the Union, Donald Trump said he is going to get lower drug prices. He said, we're going to lower the price of drugs. He's like, believe me, we're going to lower them. So I don't know. Do we believe him? He didn't tweet about it yet. He hasn't tweeted since the State of the Union. His account's broken. His Twitter broke. I know it because it's been 11 hours without a tweet. 12 hours without a tweet. So let's look at, before we get into the State of the Union, let's look at the markets overview. Japan's down 0.8%. So in Asian session early on, that's not a good start, down almost a percentage point, but Hong Kong made up for it, up 0.9%. China's down 0.2%, India's down 0.2%. So mixed markets. Yesterday was red across the board. Today we're getting a little bit more of a stabilized market condition. In Europe at midday, London's down 0.2%. Paris is up 0.2%. Frankfurt's always also up 0.1%. So slow to modest gains, but more transitory and just sitting there sideways. I can't believe we use transitory. I should work at the Federal Reserve. Futures here, Dow Jones are up 0.3. S&P is up 0.3 as well, and NASDAQ's up 0.2. So slight strength, a little bit more bullish here to the open of the U.S. session. I think today we're going to try the upside a little bit. We've had 2 down days. It's been a big drop for the Dow Jones. It's the worst 2 down days since December of 2016. I think the bulls are going to give it a shot here. Don't forget it's a bull market. So in a bull market, you can't get overly bearish too soon because you're going to get yourself in big trouble. So give the bulls a chance today. They're going to try to make a comeback, and if they fail, then we could really open up the downside. All right, in a bull market, sell-offs still happen quick, but they're usually shallow, and until you really open up the downside, and then you got no choice but just to short the you know what out of everything, because there's a big sell-off coming. And I'm telling you, at some point soon, there's going to be a 5 to 10% drop in equity markets. Why do I think that? There's not a single person in this world that thinks it's going to happen. That's why I think it's going to happen. All right. Heck, when I say, you know what, maybe it won't happen, that's when it probably will happen. So maybe I should just say this is never going to happen. There you go. Now you know what to do. Crude oil is down 0.6%. Yesterday, we had some pretty bad inventory statistics. We saw a surprise build of crude oil. That pushed prices lower. And today at 10:30, we're going to look for an update from the Department of Energy statistics. We're going to trade that in our live trading room every morning. We're open 9 to 11 a.m. Eastern, Monday to Friday. We trade as a group, and we got some really colorful characters and really good traders in that room. So you should be there. All right. Gold is up 0.4% to 1345.90. Bitcoin up 2% to 10,239. Be careful for Bitcoin. I'm still not seeing volume. No volume means no excitement for me. I don't care where the price is going. If there's no volume, there's not a lot of traction in that move. So you should look at it as it's suspect. It's a suspect move on this bounce off 10,000. We could be going to 8,000 to 9,000. Wait for a little bit of volume to start coming in. The bears can't crack the support. The bulls can't get it to rally. So we're sort of in a sideways range until we're not. And then how do you know that? You get to see volume confirm. If market starts going up a little bit, or if Bitcoin goes up and volume's increasing, you got to go ahead for a low risk opportunity to try a shot long. If volume comes out and it starts selling off again, get out of the way. This thing's falling. 10-year Treasury yield up to 2.71%. That's huge. It's down 2 basis points from the prior day, but it's still a pretty significant rally in yields. What's driving the yield higher? Borrowing costs, short-term interest rates, and expectations for more increases. Those kind of expectations, what do? They put downside pressure on markets. The dollar should be rallying on news that's more hawkish, but it has not. It's just been weak. That's been the trend, but we have at least stabilized at some supports. Watch the dollar today, very important. We had the ADP jobs report at 8:15. It came out at 234,000 versus 185. It's a very important release. It happens once a month, and it foreshadows the release this Friday of non-farm payrolls. So ADP smashed results, all right? But remember, you got to have memory. Memory is an important thing in this business. It did the same thing in December, all right? In December, it did 250,000 jobs versus 148 expected. That's a huge, let me rephrase that. That's a huge beat, all right? That's a massive beat on ADP. But non-farm payrolls a couple days later whiffed and they tanked and it really sold off. So the question is, will that happen again today? Despite a really strong number today, traders remember the last release and they remember this. It's strong ADP, but non-farm didn't really transpire into that same direction. So what we think in our head here as traders is, well, what's going to happen this time around? I'm going to be cautious on a bullish number because I don't know what it's going to mean for non-farms. They haven't been moving together recently. So be very, very careful and prevent yourself from building an incredibly long bias on one number that hasn't been that reliable. All right, but there you have it. It's a beat nonetheless. What else we got? 9:45 today, we got Chicago PMI, Purchasing Manager Index, not a big mover or shaker, but watch for it anyways. 10 o'clock, we got pending home sales. 10:30, we have the EIA petroleum inventories or Department of Energy. That's a really big report for crude oil. We're going to trade that live. Always a good opportunity every single Wednesday morning. And sometimes it's on Thursday if Monday's a holiday. And then last but not least, 2 p.m., mark this on your calendar. 2 p.m., FOMC meeting minutes. I'll tell you why that's important in a second. Actually, I'll tell you now. Jerome Powell is going to be taking office on February 3rd. So what do we got, 3 days? In 3 days, Janet Yellen's gone from the Federal Reserve. We're going to have to bid her farewell. I think she's done an incredible job given the circumstances that she's been in. I don't think anyone had a harder job than Janet Yellen. She had to restart the interest rate hike cycle. Ben Bernanke just came out here and just gave a whole bunch of money to people. So here you go. Here's some money. Take it. Janet Yellen's like, all right, guys, you got to start giving some of that back. So she started to unwind the balance sheet. She's done one heck of a job. Remarkable. Terrific. Magnificent. The quote from Trump. But Jay Powell is coming into town. And what does that mean? It's our last meeting today. It ends today. The last FOMC meeting was a 2-day meeting. It started yesterday. And nobody expects interest rates to go up today. That's not what we're watching for. If you're looking for an interest rate increase, you're out there. out of the box. Out of the box thinking works, but not in the market usually. We're still anticipating 2 to 3 rate hikes for 2018. And what the traders are going to be looking for and institutional investors is, will there be a more hawkish tone? That's what we're afraid of here. If there's a more hawkish tone, that would sound something like, you know what, the economy is booming, strong economic numbers, inflation's ticked up a little bit, although it hasn't. So strong economic numbers, we see good performance in the economy as a whole, GDP's going up, third straight positive quarter, blah, blah, blah. We could do more than 3 hikes. We could even consider 4 hikes. Heck, we might even do 5 if the economy is really good. That's hawkish. If they say that, run. Equity markets will sell off. The US dollar should pop and gold prices should drop in that scenario. If the status quo is maintained and there's no additional hawkish tone, then you're going to look for the status quo. There'll be some volatility, some chop, some noise. At the end of the day, it's going to sputter and it ain't going to do much, all right, because it's already baked in. It could be a relief rally where they say, phew, we expected a hawkish sentiment. We didn't get it. So watch for that in equities. It could be a relief rally. It could very well be with the US dollar continuing to the downside. But know this is super important. I'm willing to bet 1 out of 1,000 traders know this, and 1 out of 10 successful ones. It's a hawkish tone going into this meeting. We're looking for hawkishness. That's the expectation. Mark yourself to that. All right. Also, the market's pricing an 85% chance of a rate hike in the first meeting that Jerome Powell, aka Jay Powell's, we'll have to give him a better nickname, is going to take over in March. He's going to take over February 3rd, but middle of March is the first quarterly meeting at which they're probably going to raise rates. So look out for that. State of the Union last night. Trump didn't really say much. He delivered his first State of the Union address. It was 90 minutes or something like that. Not the longest. Bill Clinton holds that record. He's a talker. So am I. He didn't really take too much of an antagonism kind of point of view. He wasn't his regular aggressive self. He was trying to get some bipartisan agreement going, trying to get Congress united, trying to unite the government, Republicans, Democrats. I don't know if he did that very well. I heard some of them boo him. I saw some Democrats stand up and clap, but for things like, wow, we got to honor the American flag and stand united. You better get up and clap, all right, if you're a government representative for that, or that's your paycheck on the line. So obvious things, yes, they supported him. It didn't look like he got too much support elsewhere, but he wasn't as aggressive and making off-the-cuff statements as he did. He just stuck to the script, just went at it. And, I mean, he looked, geez, I'm going to get a down like for this for sure, but he looked very presidential last night. Here's the thing, though. That's a written script, and he wasn't able to put in his own flair. So take that how you will. It's just my observation. There's some grumbling and booing from Democrats, and they got up and left. They didn't wait for the guy to leave. Everyone just got up as soon as it was over, gave him like a half clap on the Democrat side, said bye, and took off. That's interesting. Markets didn't really react. I was sitting there with my laptop waiting to trade, didn't really do anything. And the US dollar then started to get weak after it got up and left. So I was looking for a trade, nothing happened. And as soon as I got up and left, the market moved. So there you go. I should publish on my Twitter or on my Instagram account when I'm leaving the screen. Enjoy the move. Last thing of the day, I'm going to make this very quick. Department of Justice and the SEC, the Securities and Exchange Commission, is investigating Apple over their slowing of older iPhone models. Apple could play the, we didn't know card. Well, how do we're supposed to know? We promised to be more transparent in the future. That's total B.S. I'll tell you why. How do you sell iPhones? You make the old one slower so the new one seems better. And they got caught with their pants down. They're going to have to pay for this. They're going to get a big fine. Yes, Apple said they're going to bring 20,000 jobs to the U.S. Yes, they're repatriating some of that cash, but they're going to need some of that cash to pay the fine. They're being investigated at the moment over this 2017 software update. And what Apple do, they're going to offer a discount for replacement batteries. And they promise to make battery information more transparent. So there you go. Trust Apple. You can trust them, right? They slowed your iPhone down, but you could trust them now. Now they've learned their lesson. You guys be careful out there. I think Apple's going to run into issues. There's more downsides. Sell the rallies. We've had this trade on the swing trader email for weeks now to sell Apple. Second, we sniff that weakness. We know how it goes. There's a lot of large institutional money in Apple. When you see a little bit of a sell-off, you don't just say, we're going to buy the dip. That's just the beginning. Imagine having a massive position. What are you going to do? You're going to wait for rallies to sell them. That's how you unwind or lessen or lighten your position, as we call it in the business. Lighten it by dumping a couple hundred lots. That's what you're talking about when you're institutional. All right. I'm institutional in a weird way. I'm just kidding. All right, guys, you have a good day. I think, sorry, camera shake. You guys have a good day. I'll see you tomorrow morning at 9 a.m. Watch for the Fed at 2 p.m. That's going to be very important. Watch assets like gold, S&P 500, US dollar, and any cross-currency assets are going to be very impacted by the statement. We're expecting hawkishness. We got a strong jobs number, and I think markets are feeling a little bit upbeat. We're going to try a rally early on in the session. Let's see how long that lasts. The second you sniff out weakness, just hit it. Hit that rally and bring it lower. Trade with the trend, not against it. You guys have a great day. I got to open up the trading room. TradePros, hang tight. I'm going to turn around and open it for you. Take care, YouTube. See you tomorrow morning at 9 a.m. Hope you enjoyed today's market update. Be cautious. Manage your risk and trade like a TradePro. We'd love to see you guys inside the trading room. Comes with a 14-day money-back guarantee, basically risk-free. There's nothing else in this world that's risk-free that has to do with the markets. This is. See you later, and I'll see you tomorrow. Take care, and goodbye. Okay, Trade Pros, let's map out some levels and do some trades for the day. I'm seeing some interesting stuff here around these levels. I'll tell you why this level is important right now, these 31.75s.